Let's see here. We got, okay, you're asking the right questions. These are two biggest risks with big short strategies, right? This is basically the big short. This is very similar to Michael Burry's strategy, right? This is kind of what he was betting on. Just this thing that makes like a big amount of money in the case of a big loss, right? This is basically what the movie The Big Short was about. It's kind of the same way that he placed his bets, right? Okay, here's how we solve both problems to make the strategy robust. What are we doing with our money in the meantime? If a crash takes 2 years, sitting in cash is painful. We miss out on gains. The solutions, we don't hold cash. We hold a core position. How it works, the bot keeps 95 to 100% of your account invested in safe, yield-bearing assets like SGOV. That's not actually a pretty good idea. Or broad market SPY or QQQ while it waits. The switch only when the crash signal fires. Palantir breaks the 50-day SMA. Does the bot sell a small slice of that core position to buy the puts? The result, a crash takes 2 years. You've made 8 to 10% on interest or market gains while waiting rather than earning zero. That's a good idea. Won't puts be more expensive after the drop? Yes, you're absolutely correct. When the stop drops, implied volatility spikes, making options more expensive. The trade-off, this is the cost of insurance. Scenario A, guessing the top, you buy cheap puts now while Palantir is going up. The crash doesn't happen for 6 months. Your puts expire worthless. You buy again, they expire worthless. You might lose 15 to 20% of your account just waiting for the crash. Scenario B, waiting for the break. You wait for a 50-day break. You pay a higher premium for puts because volatility is up. However, you avoid all those months of 100% losses. Interesting. The verdict, it is mathematically better to pay a 20% volatility premium once than lose 100% of your option bet 5 times in a row trying to guess the exact top. Interesting. This is very cool. This AI is really giving some very good advice here. These are like complicated option strategies, and this is really, really good advice. Okay, so it's saying the core state, the waiting room, invest 100% of your portfolio into SGOV or to earn safe yield or SPY to ride the market. The trigger. Okay, let's make this strategy, but buy SPY rather than SGOV. I'd rather be sitting in the S&P 500 personally. SGOV is going to pay me about 4% a year. The S&P 500 historically has done about 10% a year. So I think I'd rather sit in SPY rather than SGOV. I think I'd rather do that personally, right? It's definitely more risky, but at least we have that upside. At least we're not getting killed when the market's going up. But in this case, if it turns against us, we're going to make some money. Okay, let's make the strategy, but buy SPY rather than SGOV. We're building out that strategy. Let's see what happens. This other strategy is still being worked on. This is taking much longer than expected. Okay, something happened here. Let me refresh. Let's ask it to do this again. That's kind of weird. Something hit a snag there. All right, we're working on this other strategy. It's TQQQ trend with QQQ puts. So these are both kind of same sort of strategies, right? We're buying long term. So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.